Hello there, traders. Welcome to today's live stream. My name is John, Senior Market Analyst here at Blueberry. I'm going to be taking you through some key charts to watch, some key data that has happened recently, and yeah, just going to take you through some possible trading opportunities in the market. I've been watching the US 10-year yield kind of pull back a little bit over the past sort of few moments. At 12:30 today, we had some GDP figures which came in just slightly above expectations, and that kind of saw the bond yields fall a little bit. But now breaking back above that 50. I've been watching this quite a bit recently, especially when it comes to looking at sort of day trading moments. So let me just add the Japanese yen on here to show you something pretty neat. So I was basically buying dollar yen this morning. So you can see the US 10-year yield. I'm just going to try and separate these a little bit. So the US 10-year yield is the black and blue candlesticks, and dollar yen is the green and red candlesticks. And what I was looking at this morning, or essentially what I was looking at, was trying to take advantage of this sort of yen weakness that we're seeing in the markets. And what I noticed was we were getting that nice little kind of push up in the bond yields. Let me just grab a pencil. Hi Dan, hi Pejman. Hope you're doing both. Hope you're both doing well. Couldn't get my words out then. Hope everybody is well today. But yeah, so we'll keep an eye on this, because we were seeing the bond yield starting to sort of rally up here, and then dollar yen was kind of following that path as well. When we saw the bond yield start to pull back, that's when dollar yen started to push a little bit lower. So looking to see if this kind of pans out, how this pans out today. You know, if we get a break of that 50 moving average and see something like this on the bond yields, then dollar yen might start pushing back to the downside here. So I just thought I'd show you this. This is sometimes how I like to look at the markets in terms of intraday moves. Sometimes I like to look at the bond yields before looking at the sort of prices of what's going on. You know, when it comes to EU bond yields, you know, I was looking at the fact that we were trading lower earlier today. And if you go and grab your euro US dollar price on the chart, pin that to the new scale on the left, and just make sure that this is on candlesticks. You can see that they follow very, very similar path. So I was looking at this and basically looking at seeing how the EU 10-year yield is moving in tangent with euro prices earlier today, right? So yeah, I was basically trading euro earlier, and I was looking at kind of opportunities to get short. So I actually shorted this little move through here because the bond yields were below that 50 moving average, and you can see we're still kind of trading below that. So I'll be interested to see if we break out of this little area here. You know, if we can break out of this to the downside, I think euro prices could trend lower if we do see the EU bond yields continue to push lower. But I'll come back to this a little bit later. We'll go to check out some other markets first. We're starting to see a little bit of a boost to the US dollar over the past few days. You know, we are heading into the April 2nd quote unquote liberation day that Trump has called it. You know, and could we see a little bit of dollar buying going into that event potentially? So let's also have a look at what's going on here. Hi Ratish, hope you're doing well. Welcome. So we will go over a little bit of intraday charts. I'll wait till 2:30 though, see when the US market opens, see if we can get anything from that. Yeah, doing really well, thanks Ratish. I'm just keeping a very, very close eye on a couple of markets. I missed the pound Aussie long, which I would have got long at 205.0, but I missed that chance to go long. I'll say I missed it. I put a buy stop order in, but I got it to cancel after a certain time, and by the time it had been cancelled, the market then rallied through the entry point. So, you know, missed out on a little bit of a potential rise up there. I'm still long silver at the moment. It did come up into $34.10 and has kind of rejected that. Let me just kind of bring this up over on trading view here. So I'm still long silver at the moment, but at the same time we are starting to see a bit of a pullback to that now. If I go to the hourly chart, you can see that here. It came up into the 34.20s, 34.10s again, which were these previous highs that we saw back in March, and has started to sell off. You know, I looked at gold, and gold had done a very similar thing, and I think this is why we are seeing that big move down. Essentially, is it's come up into those all-time highs again, and it's just been sold off from that point. Whether that's quick profit taken from the guys that got along back at $3,000, you know, suitable targets just up at this point, you know, and then if it ranges here and then breaks again, then, you know, we could see a little bit more momentum to the upside here for gold prices. But yeah, nice, or I say nice, large reaction from that previous high there, which is not necessarily worrying to me, but at the same time, we can see, you know, usually when we do get back up into a swing high, we can see the market participants take profits, right? And that's potentially what happened here with silver. We've come back up into these highs here. Market participants have started to take off some of those positions. You know, we are coming up into that sort of larger area of resistance. And, you know, I've still got a target on at 34.50 and 35.50. That's where I expect silver prices to head towards. So I still have exposure to this market. I still have risk on in terms of my stop loss is at 32.58. So my stop loss is just underneath these daily lows here, underneath this low here. Okay, so I'm still buying this. I bought this twice, so I'm in two positions. Basically one towards that $33 area, and then as the market was breaking out, I bought again. And both stop losses are now just sitting under this swing low. You know, we had a really nice change in terms of, you know, the market goes below that 50 moving average. You can see we get that development of the downward trend. We break that 50 moving average, and the price is moving higher. So essentially, I'm going to keep an eye on that 50 MA. If the market starts to break and close below it, then I'll possibly get out of this move here. But I do like the daily chart still. It's just that we have come up into that high. I probably should have took a little bit off when we got to that high, because market was pushing aggressively towards it, but again, just didn't anticipate the news kind of pushing silver prices back that much. I thought that we'd just get a little bit of a reaction there, but it's quite a big reaction. So I'm looking to see, you know, I might take a little bit off if we can kind of push back up at those highs. You know, that would be ideal for me. If we could push those highs again, I'd be very happy to take a piece off of that. So we'll see. I'm going to I'll set an alert there, and if the alert goes off, then I can take a piece off of it and see if we can push beyond that, because my target, like I said, is up at 34.50. And then second target, I've got just under the 35 area. I need to move that up slightly. So around about 35, yeah, just around 35.90 is where I've got my secondary target. So yeah, let's see how that plays out. You know, silver has been the best performing asset for me this year, so I want to try and get as much out of it as I can, because other markets have not necessarily been performing too well for me. you know, especially from the currency side of things. Currency side of things has been a little bit of a difficult one for me at the moment, but we shall see if that changes anytime soon. So who else we got in? Vincent, good afternoon. Yeah, you're looking for another entry, took profit on the last order. Nice. Yeah, silver has been good, so hopefully we get another opportunity to see it kind of spike higher again. Gold, like I said, has come back into those highs. I think if gold breaches into new highs, and I think it's going to be good for us to, you know, for silver anyway. You know, it'd be good for silver because it'll just carry on through with gold essentially at that point. Gold silver ratio again starting to kind of reject this area as well, and this is why I'm, you know, quietly confident about holding this silver position, because we're still at a really high level. You know, I want to see this start breaking down. If this starts to break down, then we'll see a lot of inflow into silver, and that's when I really want to try and, you know, get involved with that market. Let's talk a little bit about sort of the currency strength meter and the charts this week, because this is what I like to do on the sort of Thursday stream. I like to kind of go through the performance of the currency strength meter really and have a little look at the markets from that point of view. There's a few markets that just haven't set up this week. You know, I was looking at potential sells on Aussie Swiss, and they haven't sold off. Aussie has actually been a fairly strong currency this week. So, you know, if we look at the performance of Aussie Swiss this week, it's just gone up, right? Which is pretty much this move here. You know, bullish Monday, Tuesday, Wednesday, Thursday starting to give us a little bit of a sign that we could start to see a bit of a break to the downside here. So maybe I'll see how it closes this evening, or what I am kind of watching at the moment is this potential kind of breakout. You've got this almost like double top situation going on. So if you can break below these lows here, then, you know, it's maybe something like this could be an option for us going forward on Aussie Swiss, because I still technically like the downside in the Australian dollar. Not only do we have the situation with the currency strength and weakness, you know, we have let me just go to get the COT reports. You know, the commitment of traders shows us that hedge funds are still selling aggressively the Australian dollar. So although that doesn't, you know, mean that we should go to the chart and just sell it, it just shows you that there is still kind of wider intent that we are starting to see that. You know, when I look at the Swiss franc, they've added long contracts. When I look at euro, they've added long contracts into euro. Now, I did take a euro Oz long position at the start of the week, and I cut that for a small loss. And it's a good job I did in the end, because price did pull back. So the way I tried to get into this market was I saw that we were in the secondary phase here. Okay, so when I always look at the markets, let's try and map this out a little bit better. So here we have sort of the primary phase, right? So, you know, we can actually add text to these days. So I can say primary phase, okay? And then we have the secondary phase, okay? So let's just grab that. Secondary phase, and we'll change the color of that line to like bright red or something. Okay, so we have the secondary phase. Now again, what I'm trying to do as a trader is identify where that secondary phase is turning into a primary phase again. That's all my job is, right? All my job is to try and find out when that primary phase goes from the secondary phase into the primary phase. And there's a few ways that we can try and do that. It doesn't always work, as I'm about to show you, but at the same time, it's something I try and do consistently over and over again. So my thoughts were, we could be starting to go into a new primary phase here. And if it did, we could potentially see prices back at these swing highs here, or we could see sort of a move higher to another level of resistance higher up, okay? Which I still think the market can do. It's just I was looking to try and get in there. So usually, or what I typically do, is look at the 4-hour time frame, right? Because you can see in that daily secondary phase, you get this kind of lower low, lower high pattern forming. Okay, let me just grab a different color pen there. You get this kind of, can you see that lower low, lower high, lower low pattern forming? So what I try and do is find where that pattern is changing. Now, I did get into this a little bit early because in theory, looking back at it, and this is what I've made notes in my journal about, is that the true sort of high is here. So I should have waited for either sort of a double bottom pattern breakout like that to start buying the market again, or I should have waited for this level to be breached. Okay, so I made a note of this in my journal. But instead, you know, the market pushed back, pulled in, and I started to buy in and around this area here. And, you know, it started to work out okay, but then it just started to reject this area. Okay, and the reason why I got into that as well, because I went down to a lower time frame. Okay, I went even lower, I went down to the hourly chart. Okay, so when the hourly chart starts breaking trend, sometimes I'll look to try and get it on the hourly chart. The reason being is because I can get a tighter stop loss. I can maximize my reward to risk ratio. Okay, the problem with that is it's a higher risk trade in general, because, you know, it could just be that kind of simple pullback, or what you call a complex pullback in the overall trend. So, you know, really speaking, I needed the 4-hour to change trend. Instead, I waited for this hourly chart to do it instead. And you can see, you know, the market started to make again lower lows, lower highs. We consolidated, we broke out. That's where I went long. Stop losses below the lows. So, like I said, the market was doing okay at first. You know, it was almost creating that sort of ascending triangle, which is something that I like to see. But it didn't break out to the upside. Market did not break out to the upside. Instead, it broke lower. So what I did, close that position out for a very small loss. As soon as that candlestick kind of broke through here, I took myself out for a small loss. So I negated a big losing trade here. And this is something that most retail traders don't do. When the conditions change, most retail traders still hold the position, right? In hope, right? They become optimistic that it can change around. In my experience, a lot of the times the market doesn't turn around and go in your favor again. Yes, there has been times in the past where the market kind of gets very close to stop loss and then takes off. You know, we had it recently with New Zealand yen, right? Where I got stopped out on spread essentially. But, you know, they are very, very rare occasions. When the market is printing more information and you see that that information is changing, just cut the loss. Best thing you can do is, if it then works out again, you just buy again, right? You know, and you've only made a very small loss in the first place. Instead of putting your 1% risk here, losing your entire 1% risk, you know, here you're out for like 0.18 or whatever, you know, or 0.2 of a loss, which is a lot easier to stomach than that full 1% move, right? So that's exactly what I did with Euro Aussie. I expected the primary phase of the daily chart to come back in. It hasn't. Instead, we've had this kind of complex pullback on the daily chart. So that primary phase didn't happen. It's almost like an extension of the secondary phase. Okay. So again, I'm trying to find, you know, first of all, are the conditions still there to buy this market, right? Are the conditions there still to buy this market? Well, technically, we have not made 2 successful closes below that low. Okay, on the daily chart. If we had 2 successful closes below that low, I would be expecting a deeper correction here on Euro Aussie. Second thing is, has anything kind of changed from sort of like the fundamental outlook of this market? No. You know, if I go take a look at the EU 10-year yields, these have been in a similar fashion, right? The market was pulling back and it's almost creating that sort of double bottom, very similar to Euro Aussie. So if these start to take off again, I'm fairly confident that the euro is going to take off as well. So looking at the potential correlation between the bond yields there and the prices, right? So again, nothing's really changed in terms of trend because we haven't had two closes below that low, right? Now, when I look at the 4-hour chart, I also ask myself the question, well, where's the sort of significant area to see that, again, change trend? Because we didn't technically get it here because the market made a high, made a new high here, but didn't get a close above, and then made a new high here, didn't get a close above, market sold off. Now we've got this kind of consolidation area and we're starting to break out of that. So I feel that if Euro Aussie does start to kind of push beyond these swing highs here, right, say a 4-hour close above that, then we're starting to see a potential move for this market to trend back higher and maybe back towards that 174 level. So that's what I'm going to be looking at here. Very similar to pound Aussie. I missed this trade though. You can see I've put a consolidation here. And again, I'm trying to look for that moment where we get that sort of primary phase turning into a secondary phase. So if I just, let's see if I can kind of copy that. And let's go to pound Aussie. Paste. There we go. Let's go to a daily chart here. Right. So we have the primary phase, okay, that recently had back up into them those swing highs, and then we have copy secondary phase here, okay. And I say it's a secondary phase, even though that looks like a double top, because you still got higher lows, right? Still got higher lows in here and still got higher highs. So this is still technically good for bullish moves back to the upside. So again, that daily is pulling back. When we look at the 4-hour chart, what's the 4-hour chart doing? Well, we had a move up, consolidation, and then a breakout of that consolidation, okay? When I look at the hourly chart, you can see that in a lot more detail. You know, we've broken back above the 50 moving average. We've broken out of that consolidation. Now, what I did, I had a buy stop order here, but I asked it to cancel after 2 hours. So, you know, after that candlestick closed, we had that hourly candle there as well. So, yeah, unfortunately for me, that one cancelled and the market has kind of pushed higher. But, you know, that's okay, because if we do get a pullback back into this zone, I can just go down 2 time frames and look for the same thing. You know, 15-minute might then start to push up, give me a bit of a consolidation breakout for a move higher. So I'll keep an eye on pound Aussie as well, but this is starting to look nice as well with a move back up towards that 2.06. And this is another market that is featured on the currency strength meter. Okay, here we have pound Aussie bullish, buy it. Okay. Sorry, I missed the question here, Andre. What are the next moves for pound US dollar since there is UK and PCE data tomorrow? Good question. The answer to that is I don't know. I'd rather wait for the data to come out first and then try and trade it. You know, looking at this market here at the moment, we can see that we are gonna, you know, we are starting to see the market just consolidate around these lows, this kind of 128. This was the area that I didn't mind buying from, right? That little area in there. I don't mind actually buying in and around that point, but, you know, again, think of it like risk reward ratios is hard to find. Now, that being said, when we take a look at the sort of fundamentals going on with the US at the minute, I need to update a few things, like the latest GDP figures and stuff. But the US is okay, so it scores a +3, and that's out of 33 conditions there. However, the pound is on a -10 for me, and there's a few reasons for that. Now, we're waiting for retail sales to come out tomorrow. Retail sales are expected to come in a lot lower. I think they're expected at kind of like -0.3%, right? So that's quite a significant drop expected in the market tomorrow. So I'm looking to see how that impacts pound going forward. I thought that maybe Chancellor Reeves would announce rate hikes either. What am I talking about? That's the Bank of England. Tax hikes I thought Chancellor Reeves would do tax hikes, and there was no mention of any tax hikes. I think if we had that yesterday, I think the pound would already be kind of plummeting to the downside, because that's the one thing that we're not really seeing from a fiscal standpoint really in the UK at the minute, is where are they on sort of taxes. And you can see, the market is just struggling here at these kind of points. Looking at the consolidation you've got there, it just shows you that the market is uncertain at the moment, doesn't really know what to price in. So let's see what happens. If we get a retail sales that, let's say retail sales misses expectations to the downside, like minus 0.4, minus 0.5, then I probably would expect pound to be a lot lower. But this could have a bit of a yo-yo day, because if the US PCE then comes out and it shows something that's a lot more sort of sinister, then we could see a lot of back and forth going tomorrow. If we think about what these are, so you've got core PCE price index. That's basically the Fed's preferred method to watch inflation. If that grows higher, okay, then interest rates are not as likely to be cut, basically. So that is a positive US dollar, right? If you see a higher number here, it's positive US dollar. If we see, obviously bearish there, it's bearish US dollar really. If we see anything below that figure there, I think it's going to be quite shocking. I think if we come in slightly above, and it's not as bad, then I think maybe the pound will have a little bit more of a push to the upside, because it is technically one of the stronger currencies at the moment, or is technically the strongest currency at the moment in terms of sort of my measurement of currency strength and weakness. It's at a +5 still. So, for now, it's still on my sort of list to be a buyer of, but also it's on the list that it could reverse. So it's in that kind of weird place right now, pound. And I think the data tomorrow is going to play a big part of that. We've also got sort of final GDP out as well. Goods trade balance, that's important to economies. We can see here they're pretty negative, but this has actually been climbing ever so slightly. If this loads up. Or not. Don't think it wants to load. Okay, well, anyway, this has been kind of climbing slightly higher as well. So yeah, I think, see the previous goods trade balance was minus 18.6, went to 18.9, went to 17.4, estimated to go higher again. So that's technically a good thing for the UK. But I just think there's a lot of uncertainty, and I think that's why you're getting that sort of pound consolidation there. Okay, I'm favouring a little bit more of a break to the downside, especially because if we can get prices back here, I think pound will probably outperform the dollar. Put it that way. I do think the dollar will be a bearish currency, and I do think the pound will outperform it. I just don't think the pound will necessarily outperform other markets. So for instance, euro pound, I like the idea of buying euro. So selling pounds here could be a good idea. Just waiting to see if this can kind of come back down into these range lows. Pound Kiwi was something that I was kind of looking into as well, because the Commitment of Trader report is showing some decent buying of New Zealand dollars. So anywhere you got that kind of consolidation, retest, maybe something like that could happen. But yeah, it's difficult to say. And I'd rather not predict what's going to happen. I'd rather wait for solid data and then trade off the back of that instead. So silver's trying to make its way back to the upside. I'm just keeping an eye on it on the top screen there. You can see it's this really long wick to the upside. So we've had the US open. Let's just see how the equity markets are doing right now. NASDAQ has been usually the sort of leader of the markets recently, and you can see we had a down day yesterday. Same across the board, really. The S&P 500 was down. The Dow not so much. So out of the sort of indices, the Dow was probably the best performing one yesterday. We actually do have a commitment to trade a long signal on the Dow at the moment, but I'm not really touching the stock markets yet. You know, I did like the fact that we were below 20 on the volatility index, and anything below 20 is usually good for stock markets. But at the same time, we're going into the end of the month here, which is also end of quarter, which is also, you know, going into next week, April the 2nd, where we have Trump announcing reciprocal tariffs, right? I feel like that could create a lot of volatility. So sometimes, you know, the best thing to do is not trade, you know, and sit on your hands and wait for more development, wait for more information before doing anything. One market I did like was the Norwegian kroner. I like the idea of buying Norwegian kroner. Let's actually see how their interest rate came out yesterday. Here we go. Let's see. Kept rates steady at 4.5%, as widely expected. Policy noted that inflation has risen sharply and remained significantly higher than anticipated. Yes. They caution that lowering policy rates too soon could further fuel price increases. Absolutely. Norway's annual inflation rate accelerated to 3.6% in February, up from 2.3% in January, marking the highest level. Despite this, official indicated that their current outlook suggests a rate cut will occur late in 2025. No. Though uncertainty remains over future economic developments. Central bank's policy rate forecast aligns with a reduction of 4% by the end of the year, followed by a gradual decline in subsequent years. I don't think they can't do that right now. They're going to be so data dependent at the moment. You know, we go take a look at the calendar. Countries. Let's go to Norway, hit save. So what you want to do is put it on 1 star, and we'll go to previous month. So when we look at sort of the key indicators that drive an economy's choice to either cut interest rates or hike interest rates, yeah, there are some certain factors. One is the unemployment rate, and we can see here on February 27th, that's the alert for silver going off, just coming back into those highs. Might just take a piece off of this now, because I've got 2 trades and I'm thinking take some off of each. Let's see. Right. Market execution. And close that off that one. And I'm going to close a piece off of that one as well. Okay, so I've closed out a little bit on each position. We'll look to see if that can continue to trade higher. So it took a little piece out of it, not a lot. We'll see if silver can break through those highs again. Obviously, I don't want this to just roll over and walk away with absolutely nothing, because that would just be a bit pointless. So it'd have been nice if we had the 4-hour close above the previous 4-hour highs, because then I could have moved my stop loss below those 4-hour lows. But because we didn't, I've got to wait another 4 hours now to see if it does close above those previous swing highs before moving stop losses. Okay, sorry, let's get back to Norway. Unemployment rate was forecast to come in at 4.2, right? Previous was 4.2. Actual was 3.7. That's a decrease in unemployment rate, which means more people are working in the economy. What happens when more people work? More people have more money. more money floating in the economy is more demand. And that was shown in the inflation data, right? You can see that core inflation rate, so with excluding sort of your energy and food, core inflation rate year on year surprised massively. It was previously 2.8, came in at 3.4. Even month on month, core inflation came in at 1%, up from 0.1% previous, and forecasts were fairly low on that, 0.4%. So there's been a significant jump to inflation here in Norway, and that's again a big problem in the market for them. Also, retail sales, and this one I think is a little bit more damning, because retail sales month on month rose to 1.1%. Previous was 0.1%. The forecast was minus 0.2, right? And that's on February 28th, right? So let's go and have a little look at what happened on February 28th. Okay, that is here, right? So retail sales shocked aggressively here, and look what happened following that data, right? Just sell off, big sell off. Inflation didn't even come out until, when was the inflation was out? March the 10th, the inflation rate came out, which was already here. Okay, so you know that is quite a significant downside move, and that was based off of that sort of information that we had when it came to sort of retail sales, and the markets continued lower. So I quite like the idea of buying Norwegian kroner, especially against weaker currencies. You know, one market that we did like a while back was Euro NOK to the downside, and that has rolled over. I haven't participated in that move. I participated in it up here, but I didn't participate in that move because I just wasn't focused on the Norwegian bank at that point. But yeah, nice big move. Just shows you how interest rates and interest rate expectations can really play into the hands of these currency prices. Okay, and if you want to know what interest rate expectations are, go take a look at the bond market, okay? Because that's their job. Their job is to trade interest rates, okay? So, you know, you can see the US 10-year yield here has been falling. It's been falling since January 14th. If you go take a look at the US dollar index, and you see when that started to fall, January 15th, 14th was here, and look what happened there, in line with those bond yields, right? Because they're pricing in the idea that there's going to be rate cuts from the Federal Reserve, and that drives down that currency weakness, okay? The opposite side of that, you'll have the German bunds, or you can use the EU 10-year yields, right? That has risen quite sharply, right? So that's suggesting that bond traders think that the ECB might have to hike rates essentially in 10 years, right? That's the expectation, the 10-year expectation. You can look at the 2 years as well. They're a little bit more reactive to current bond situations. So you can see EU 2 years just dropping to the downside at the moment. But the 10-year yield is something that I like to use, and that market is fairly positive, especially when you compare it to the currencies. You know, you can see that. And you look at Swiss 10-year yields, they're dropping, you know, but look where they are. They're at 0.64. The current interest rate in Switzerland is 0.25%. So there's quite a difference between where bonds are pricing, when the bond traders are pricing interest rates, whereas current interest rate is at 2.5. Okay. When you look at the 2 years, that's not as bad. You've got, you know, that's trading currently at sort of 0.19. So, you know, 0.25 isn't too far away from that. So the immediate rates are okay. But when you kind of look into the future, they expect inflation to be higher. So rates could be towards 0.75%, for instance. Okay. Let's go take a look at some of the markets on an intraday basis then. So let's have a look at dollar yen, because dollar yen was coming into a really interesting level of resistance, but at the same time, those 10-year bond yields have been increasing, and I thought that we could see a little bit more upside to this market. Looks like over the past sort of little while we have had a little bit more of a boost up. Again, if you want to try and sort of trade this type of market on an intraday basis, if you look at the US 10-year government bond yield, you can see that they were rising all morning, okay, and all overnight, all morning, and you can see how dollar yen has risen with it, okay. And usually bonds go first, right? So when you look at the fact that, or what I try and do anyway, is if we're trending up, look for dips, okay, look for dips to buy, and that's something that I've been doing as well, but I've been doing it more across other assets. So we go on to euro, for instance. So this is where I was selling euro today, okay, selling that little pullback in the market, and I still quite like the idea of euro downside. Again, let's go just take a look at the bond yields, down 1.65%. We started to see this kind of rounding out of this bottom here though, and we were kind of pulling back, and that has led to that sort of euro dollar kind of choppiness that we're seeing here. But if we start to see that it holds below that 50 MA and we start to see these move lower, then I think that euro dollar could kind of trade lower as well. So I'll be watching this, you know, potential breakout to the downside here for euro dollar. Okay, so silver's continued to push higher. It's trying to break through those highs. I can see that it's attempted to make another little break for it. So we'll see if it can kind of hold above them. Let's have a look at gold. Gold also trying to break through that high. Okay, so this is what we need to see. If silver's going to continue higher, we need to see gold prices continue higher as well, because there's a very strong correlation between the two. And, you know, I want to see gold continue to kind of drive higher here, because it will drag that silver price with it. Okay, so let's see what happens. Hopefully we can continue to see that push higher at the moment. But yeah, it looks like we are getting it at the minute. We'll see if we can kind of close above those highs. Be nice to see a close above. I think if we got that close, then it would cement that there are some strong buyers, even at those real kind of significant swing highs in the market. So yeah, I imagine that would have been a bit of profit taken, to be honest. You know, we'll see if they can get and hold above that 30, 57, 62 area. That would be really key, I think. Above sort of 57, 62 and change would be nice. That could give a little bit of a lead there for silver to try and break through these kind of 34.25 levels. And then hopefully up to first target, which is 34.50. I'm just going to add a little alert there. 34.50. Let's see if we can get a push up into that. Let's see how pound Aussie is doing. Pound not really doing anything right now. Looks like we're starting to see a little bit of a recovery to the stock market. I can just see some green there, but if we go and have a little look at the CFDs, we can also see that we are starting to see some green on the board here. S&P 500 looks to have created a really nice wick to the downside there on the hourly. Actually, you can see that little gap now, can't we, on that hourly? Just in there. Kind of punched into that gap. Market's now kind of closing up. Interesting, you know, I kind of, if I wasn't so, if we didn't have the Trump sort of tariff situation going on April the 2nd, I think I would be happily buying stock markets, especially because of, like what I said, with the volatility index being below 20 and seeing this sell off, you know, that is usually a good sign. If you look at the 15-minute on the S&P 500 compared to the 15-minute on the VIX, you can see that the VIX fell here, right, whilst the S&P was falling. And that's usually a good divergence signal to be a buyer. You know, and look at that nice little rally up to the upside, because if volatility falls, the S&P 500 tends to climb. So if we see this continuation of that narrative, then I think it's going to be positive. And like I said, anything below 20 is typically positive for stocks. So, you know, if we weren't in that situation where next week we could see, you know, Trump come out and add reciprocal tariffs, but then go a bit more aggressive, then I would happily be buying this market personally. But, you know, we're not in that situation. But I mean, that's a nice little break on the 4 hour. You can see that the sentiment has definitely shifted now. We're at this 50 moving average here, right? And you can see that we started to kind of close above, really get above it now, and we're starting to close above it again. So I feel like the momentum is starting to shift here when it comes to that kind of sentiment in the market. I'm just, because I'm a swing trader, right? I'd be looking to try and either target these swing highs or a little bit higher. So at the same time, I might have to leave my trades on a little bit longer. And that might bring me to April 2nd. And I don't like the idea of that. So I think if you're intraday trading it, just watch your volatility index on the intraday side of things. Yeah, I'll be looking. I mean, it's been pretty bullish recently, hasn't it? From up here. So I guess you'd be pretty much buying every day at the moment if you're on an intraday basis anyway. Any questions so far, guys? The chat is very quiet today. Just winding down for the week. Let's have a little look more on the currency strength meter side of things then, because there were some other markets that we could have looked at. Aussie yen, Aussie Kiwi were also some that I looked at. Aussie Kiwi especially because it closed bearish yesterday. That was a market that I was tempted to sell. Let's have a look. So we can see that this is starting to make the right sort of noises here, because we kind of broke through these lows, right? So it is starting to make the right noises. We can see that it's pushing down here. It's starting to, again, close below that sort of 50 moving average. I would just like the 4 hour maybe to kind of break through these lows in and around that area there. If the market can break those, maybe we get that kind of push to the downside. Yeah, they definitely look choppy. And choppy markets are not good for trend traders, right? It's been choppy for me as well. So I've not really taken too much when it comes to currency markets, and those ones that I have traded, I've taken out early for small losses. How do you assess the fundamental strength rank? Well, this is something that I'm trying to work on at the moment, Dan, to be honest. I'm trying to give it a strength. So what I've been doing at the moment, so you can see from this little key up here, I'll just zoom in a little bit. I don't know if you can see that properly. But what I've been kind of working on at the moment is this kind of simple one at the minute. I need to reassess it, to be honest, because what I really wanted was to have very similar fundamental trackers across different economies. And then we could give it a scoring system and then almost create like a strength meter in terms of like the fundamental strength meter. That's the way I'm envisaging it anyway. The problem is, or the problem I find is that a lot of economies work on different things, and they're not all, it's not like one glove fits all. There are certain elements that are the same. So this is why I think I'm going to change it slightly, because I think at the moment with the US tracker here, I am sort of focusing on a lot of data, right? Whereas one suggestion I had from a work colleague was, why not do it in sectors? So have like a labor market sector, and then we can have like an inflation sector, We can have like I don't know, like economic activity sector, right? And then in the sectors themselves have like a system within those sectors. And then, you know, let's say the economic is bad, you know, that could just be like a -1. You know, inflation bad, -1, labor market -1. And then I'd have other things like, you know, the difference in sort of bond yields. So I'll do the bond yields. Let's say the difference was negative. I could go -1. You know, let's say COT reports, COTs showing selling, -1. You know, just kind of things like that I could try and put into it instead of having all of these and then trying to create a system out of it. So what I do at the moment, and this is like version 1, right? So I've got like version 2 in the background, which is looking more like this. And then version 3 will probably be an updated version of that. But what I do at the moment is, so I track the actual, the forecast, the change in that, and the previous. So the way I score it right now is, let's say, for instance, I'm looking at this non-farm payrolls here. The previous was 125, okay? So the forecasts were to beat that 125, coming in at 159. Okay, so they're expecting a higher jobs outcome. However, it only came in at 151, so the change was down. Okay, so it was a surprise to the downside, but it still beat the previous number. So what I've been doing is, so let's say it beats, let's say it comes in under forecasts, right, but beats previous, I give it a +1 scoring. Okay. An example of another one here is the unemployment rate. So previous was 4, there's forecasted to be no change. It came in at 4.1, which is negative. So it gets a -1 score. All right. Now, I then started to kind of add like 2s and -2s into it. So for instance, when we take a look at manufacturing PMI here, it was at 52.7. The forecast was below that. So that's a negative already at 51.9. But then the actual came in worse than that. So it was below previous, below forecasts. So I've been given that a -2 scoring. Okay. So this is how I'm trying to work it at the moment. But I think it needs some work because this bottom number down here has been fluctuating quite a lot. And what I would like to also do is track that number over time, so when it changes, to see what the change has been in the economic data prints, because ultimately what I want it to tell me is the US economy in a bad way, and how do I take advantage of that? You know, is that short dollar, for instance? Is that short stocks? You know, is that you know, favorable for gold? Is it good for silver? X, Y, and Z. So that's what I've been trying to do here. It's been trying to use this as like a map to try and sort that, essentially. So yeah, it needs some work. It needs some work, I must admit. Because not all economies, so obviously the US is the biggest economy, so not all economies are going to be impacted by the same things. It's like, yes, services is very important to the US, but manufacturing isn't as important, but it could be in the future. It's just not right now. So we'd see the market move more on the services data than the manufacturing. However, in the UK, you know, would I necessarily focus too much on manufacturing PMI? Not really, because it's very much a heavy services PMI. I've included it in the data here anyway, but at the same time, you know, there is that little bit of difference. So yeah, I'm trying to work out a system which is sort of similar. So I'm thinking of breaking them down into sectors and then almost individually scoring an economy and then going in that bigger picture. Where do I go from there? So yeah, it's at the moment, this is how I assess the fundamental strength of a market. Is it the most effective way to do it? Not yet, not yet. So we'll see. Silver prices now breaking those highs. TP1 is in sight, 25 pips away. Which is 34.50, which is that alert there. So yeah, we'll see if we can get a little bit higher up on that one. 25 cents away, target 1. Be nice if that hits today, because then I can move stops to break even on the second position and then go from there. To be fair, I've reduced risk massively on this now. See what the stop losses are. Yeah. Let's see how that one performs. I must admit, I've not taken a losing trade on silver this year, which is pretty impressive. Pretty impressive. It's my best performing asset by far. Like I said, I've tried to dabble in a few currencies this year, and the currencies have not been great for me this year so far. There's been a couple. I mean, look at Kiwi yen actually. I'll tell a lie, Kiwi yen. I've not got back into this. I don't know if anybody else got back into this trade, but we were talking about long on Kiwi yen, and I managed to lose one trade here, but buy in again, and it just flushed all the way up to the highs. I got stopped out on a trade in stop loss, which was this red line here, and then it started to kind of set up again, but it's just been a bit of a slow grind. You know, I think if there was some momentum behind it, you know, I would have tried to have jumped back on it. But it's just been a bit of a slow grind. But, you know, it did actually reject back up at this 85.60, these kind of double bottom neckline, which we spoke about. And, you know, we did get that overall rejection. You know, looking at the 4-hour chart, when it did break the 4-hour trend here, you can see we got that pullback and then the market rallies again. You know, if you were looking at these in phases again, which is exactly what I would have done, when the price sort of broke back to the upside here, I would have been very much looking at those sort of pullbacks. I wasn't, obviously, because I would have traded them, but you know, when I look at when we were looking at EURUSD, just copy these up again, paste, let's get the pound Oz and get the other one, copy, paste. You know, you've got these kind of cycles within this area, right? So you got that primary phase again, secondary phase, and we can just kind of clone these up. Clone, primary phase, clone, primary phase. Because this is a 4-hour chart, I probably would have gone down to either the 30-minute or the 15-minute to look for those changes in trend structure, right? And you can see that really clearly here, right? Secondary phase, what is the market doing in that secondary phase? It's creating lower lows and lower highs, right? Where does that condition change? This candle here, right? So it could have gone long on that breakout candle there. Depending on how aggressive you want it to be, you could either go stop below the low or stop below that swing low, and that would have been a pretty nice trade. Same here as well. Market is making lower lows and lower highs, but then it starts to consolidate. There's the swing high. That's the breakout candlestick of that high. Market rallies up. Again, stop loss below the swing low. And it's just rinse and repeat of that same thing is what I tend to do anyway. This is what my kind of strategy is that rinse and repeat of higher time frame trend, lower time frame sort of breaks of that trend, and it just, you know, this is something that I just found is you know, stood the test of time when it comes to trading markets is you've got all these kind of little highs in here, and then it breaks that trend, and then the market starts to go with some momentum at that point. So yeah, this is unfortunately I missed out on this one, but this, you know, this was the way I also managed to trade this little move down in here eventually. So I actually took an initial breakout trade of this here. Okay, granted, looking back, probably should have waited for the pullback, but I didn't. Anyway, got stopped on this move down. We consolidated. What happened again? As soon as it broke that 1 hour moving average or the 30-minute moving average, as well as, you know, those highs, it just shot to the upside and didn't even actually look back. I don't think I had one moment where I was in drawdown on that trade. It just took off. So that was nice. But yeah, you know, Kiwi yen to the upside was a video that we did a while back, especially as we were coming down into these swing lows here. You know, I really liked it down at this double bottom area, and that was all based off commitment of trader reports. We saw that the Japanese yen commitment of trader reports were at the highest levels they'd been in history, right? And that's a warning sign. That's a warning sign to maybe not get as aggressive and buy it. Doesn't mean it's going to turn, but at the same time, it is a little bit of a warning sign that something's going on. You know, when I look at the Japanese yen here, and we look at those COT reports, you know, this is what we were talking about. Extremes. The market was at an extreme. Could that be a turning point? And it has been so far. So we'll see if that continues. If not, then, you know, we will, you know, and I do expect this to continue to take off to the upside. I do, but it's just where, you know, market's pulling back now, maybe back down towards that low there would be an interesting long on yen. Okay. Right, guys, we've been running just over an hour. I'm probably going to leave it there. Let me just see where silver is at the moment. Starting to pull back again from those highs. Okay. So it made the new high. Just starting to reject those a little bit. You know, let's see if we can get that push higher. Come on. I want a good end to the week. Okay, then, guys. I'm going to leave it there. Thank you to everybody that joined me as usual. I appreciate you all. Thanks for turning up. If you can leave the stream a like, I would be appreciative of that. Have a good rest of your trading week. Yes, there is key data tomorrow, so keep an eye on that. And I will catch you all on Tuesday. Okay, so have a great one, guys. I appreciate you all. Speak to you soon.